Good morning. Happy Monday. I'm a few minutes late, but it's fine. It's fine. It's fine. My shirt says so. Okay. Wow. It's only been a week since I've seen y'all, but it seems like way longer. I don't know. This week was good. I think with Thanksgiving and being able to check out for a few days, it was good. I hope everyone else had a great Thanksgiving. As you guys log in, let me know you're here. Say, hey, what's up? Let me know where you're listening from. As always, we'll give everyone a few minutes to jump in and join us. Drink some coffee. How was my Thanksgiving? It was very low key. Usually, there's like 15 to 20 of us. Yeah, Wendy, there's something like, let me actually go fix that real quick so people know. There's something with the East Coast thing, and I don't get it because I thought it was because originally my VA was in East Coast time, and so it was screwing things up. But she's not scheduling these anymore, so I don't know what Facebook is doing. So let me go fix it, shall we? What is reasonable comp? Oh, look at that, 11:30. Okay, so let's edit this. You're the only one here. It's fine. 9. Yeah, you guys, if I ever change the time, I can't change it. If I ever change the time, I will let you guys know. I'll be like, new time, make sure you pay, and bring attention to it. I'm making it 9:15 just so, because I can't make it 9 o'clock because we're already past 9 o'clock. So we'll do that. And then I think that worked. All right. But hi, Wendy. Good morning. How are you? How are things? And then let's just go ahead and change this one too. It's fine. This is real life, right? Real life brings little hiccups, little bumps in the road, right? Okay, there we go. All right. So there's that. How was everyone's Thanksgiving? What I was saying, we might not have very many people watch live today because, I had the time wrong. But Thanksgiving was good. We were there was just 6 of us. Usually there's like 15 to 20 of us. And this year it was just my parents who came over. We Zoomed with everyone else. We Zoomed with a lot of people. My brother, my sister, Travis's sister, all that. But in terms of actually people here, just my parents. And we catered. That was new. So yeah, things were definitely different. So let's go ahead and jump on in now that I've got everything situated. Maybe reload. Gotta bring my actual notes up. I've given this one, we were talking about reasonable compensation today, and I've given this one enough times that I could probably do it in my sleep, but okay, times are fixed. Script, it's up. Y'all are starting to trickle in, so even though I had the time wrong, sorry. But let's go ahead and go. Hey there, y'all. So happy you're here. For those of you that may not know me, I am Bree Beers of Bree Beers and Associates. Bree Beers and Associates. I'm a CPA with the goal of enlightening taxpayers and business owners on all things accounting and tax. I understand that y'all don't know what you don't know when it comes to taxes and, owning a business. So our team is dedicated to creating all the tools that we possibly can to help you shed some light on that unknown. One of those tools is our awesome Facebook community, Money, Tax, and Finance for Small Businesses. And if you are a business owner, you should definitely check that out on Facebook if that's not working. You not only get access to all these trainings we do, that you also get on YouTube and on our business page, but there's just there's daily tips and posts and help and just some really good community over there. So head on over there. And if you ever cannot make it to a live or want to watch a past training, you guys, all the past lives are in the videos section of the Money, Tax, and Finance Facebook group. Otherwise, you can watch them all on our YouTube channel. And if you watch here, you know that I love the YouTube channel just because it's a little more organized and easy to find old videos. So that's that. And so today we are chatting about reasonable compensation. I've been getting a lot of questions about this from S Corp owners. So most of today will be geared toward our S Corp owners. It is important if you are an LLC, a single member, a sole prop, but you've been hearing, right? Like, hey, you should be an S Corp, or, you should consider changing to S Corp. Stay tuned, stay tuned in and listen, because if you are thinking about making that change, your reasonable compensation is an important thing to understand and know what it is and why it's important. So reasonable compensation also does apply to C Corp officers. We will touch on that a bit, but there's only a few C Corp officers as far as I'm aware in the Money, Tax, and Finance group. So I do want to make sure that I am touching base on it, but not focusing too much on it. Because from what I know, it's mostly S Corp officers who are in this group and following us. So what is reasonable compensation? So the IRS definition, I'll give you that, and then I'll tell you what it really is. Or not what it really is, but So guys, reasonable compensation is what your business pays you as the shareholder or the partner owner for the work you do in the business. That's my definition. The IRS says it has to be reasonable compensation is an ordinary and necessary expense of the trade or business during the taxable year in a reasonable amount for personal services actually rendered. My definition is better. It's a little more easier to understand. So you work in your business, right? If you're an S Corp, so if you're a sole prop, single member LLC, you just work for yourself, right? You're self-employed, meaning all the money comes into either your social security number or your tax ID. It doesn't matter, but it all comes into your business or into you, right? And you pay all of your expenses, and whatever is left over is yours to spend. It's yours to take out of the business and spend on your mortgage, or spend on, personal expenses, to spend on living expenses. All right. That is how it's treated when you report your business on Schedule C of your 1040. Okay. So again, if you're a sole prop, an independent contractor, a single member LLC, if you report your business on Schedule C of your 1040, okay, then that's how your business works. It's all of your income into your business. You spend all the money you need to on your expenses, your cost of goods, all the expenses you have of running your business, and then whatever cash is left over is yours to take. Well, when you are, and that is actually, you guys, that's the same in a partnership to an extent as well. We're not going to talk about that today, but if you're in a partnership and you want some more information, let me know. We'll do a training on that. But reasonable compensation, you guys, is for corporations. So whether you're taxed as an S Corp or you're a C Corp, okay? If you are working in your business and you are an owner, then the business must be paying you a reasonable compensation. All right. And as we're talking, whether you're an S Corp or a C Corp, so S Corps tend to not pay themselves a high enough reasonable compensation. And we'll talk about why in a second. All right. And then C Corps tend to try to inflate their wages beyond what they reasonably should be paying. The reason behind these two, you guys, so S Corps, okay, the whole reason you make the S Corp election, not the whole reason, but from a tax perspective, the reason most businesses make an S Corp election is to save on self-employment tax. All right, so what is self-employment tax? Okay, so going back to my Schedule C businesses, okay, so all of you that are on a Schedule C business. So let's say you have all of your income, you subtract all of your expenses, and you are left with $100,000 in net profit, okay? Taxable income in your business, okay? $100,000 on your Schedule C business is subject to your ordinary income tax, so whatever tax bracket you're in, it's subject to that income tax, but you're also going to get charged 15.3% in self-employment tax. All right, what is self-employment tax? It's the replacement for payroll taxes. Okay, so self-employment tax on your Schedule C business, you're going to pay an additional 15.3% in payroll taxes, self-employment tax, excuse me, in self-employment tax on top of whatever income tax bracket you're in. Okay. And as you guys are jumping on, sorry, quick side note, I see a lot of you starting to jump on. You're probably like, wait, why are you started? It says 9:15. It's because it was set for 11 o'clock Mountain Standard Time today, and I changed it, and I couldn't change it to 9 because it was 9:02. So if you're jumping on, keep listening. We really just started talking about what reasonable compensation is, and then you can go back and watch the rest. But hang in there because you didn't really miss much. Okay, so Schedule C businesses are subject to income tax, which is normal, on that $100,000, and then self-employment tax. So at 15.3%, if our taxable income is $100,000 on the business, then we're paying $15,300 in self-employment tax on that $100 in net income. You with me? So the reason people tend to want to make the S-Corp election, or a big reason why the S-Corp election is beneficial to businesses, is because what happens is your net income from your S-Corp is no longer subject to self-employment tax. Okay? Your net income from your S-Corporation is no longer subject to self-employment tax. Meaning that $100,000 in net profit that you made, hold on. Okay. Just had to make sure it wasn't a kid. That net profit that your business made, you're just subject to your income tax. All right. So whatever income tax bracket you're in. But one of the requirements of an S-Corp is that you pay yourself a reasonable salary. All right. And that is the point in that is to make sure the government essentially gets their self-employment or payroll taxes. All right. So, sorry, you're really distracting. I know you're trying not to be, but I just know you're there. So if you can just do that somewhere else.
Put my shoes on?
Yeah. The only person that really into me when I'm on a live is my husband, and I don't like it. So anywho, he's in there trying to leave. Should have left earlier, right? Okay. He's trying to be quiet. Anywho, reasonable compensation. So, but you have to pay yourself a reasonable compensation. So let's say we're going to talk about how you Wendy says hi. So we're going to calculate how to calculate the reasonable compensation in just a minute. But let's say for your industry, we do the calculation. We say, okay, $50,000 is going to be a reasonable compensation. That is something the IRS would support based on your situation. All right. So now we take that $100,000 that we had in operating income, right? All of our income minus all of our expenses, we had $100,000. Now we've got to pay ourselves a salary, right? So that is deductible to the business. Okay. So the $50,000 salary brings our business net income down. So $100,000 minus $50,000 in wages paid to you as the business owner. We're down to $50,000 in taxable income. All right. Plus, you're going to actually lower it even more because you have some employment taxes to pay in there. Okay. But we're talking about from your individual point of view, what's the benefit? All right. Well, now let's compare the two. As a Schedule C business, you were paying that 15.3% on all $100,000, right? On the full $100,000 in profit. Now you're going to pay payroll tax on the W-2 wages. So we determined $50,000, right? So you're going to pay that, you're going to pay the payroll taxes on that. Okay. But what's left, that net profit, that $100,000 minus your $50,000 salary equals that less than $50,000 in net income on your business, on your S-Corp. That's not subject to self-employment tax. All right. So essentially in this scenario, you're going to cut that self-employment tax in half. So you're going to save yourself $7,650-ish, okay, in taxes. And that's not just 1 year. That's every year that you're taxing yourself as this S corporation. All right, but that is why it is important as an S corp that you make sure your reasonable compensation is high enough, Because if the IRS ever comes and audits you or looks at it, evaluates your reasonable compensation, and they don't think it's high enough, any draws or distributions you took from the business, they can reclass to compensation, and then you're going to owe taxes on that and penalties on the taxes, and it's a hot mess. So making sure you're paying yourself a reasonable compensation as an S corporation is so important. All right, and that is something we actually do at, and any CPA honestly should be doing for you if they're making that recommendation for you to be an S corp. All right. Quick note on the C corps. Okay, if you are an officer in a C corporation, your reasonable compensation can't be too high. And the reason that happens, you guys, C corps. So corporations are usually, like, if you think about all the big businesses, okay, most of them are set up as C corporations. Okay, and from that point of view, all right, so a C corporation, all the wages they pay, just like an S corp, all the wages they pay to the officer are a business deduction, right? So it's a way to get income out of the C corporation into the shareholder's hand as just an ordinary income, okay? But let's say they've reached their reasonable compensation. Let's say it's $250,000, right? But there's still this money sitting in the business that they need to take out as shareholders. At that point, they take it out as dividends. And dividends, you guys, paid out to shareholders are not a taxable deduction, or are not taxable. Nope, not a deduction to the C corp. Okay, so, and then they're still taxed to you as the shareholder at typically preferential capital gains, but maybe not. But anyway, so that's where you sometimes hear that double taxation. When you're a corporation, you got double taxed. It's because your dividends are not subtracted from your taxable income at the C corp level, right? So essentially you're taxed on that money, right? And then you take it out and you get taxed again on it on the individual level. Okay, but that is why C corporations can't have too high of reasonable compensation, because that's a way for the C corp shareholders to try to get money out of the business without paying that double tax. All right, so now let's talk about how you calculate reasonable compensation. Okay, how do you calculate reasonable compensation? Well, my advice to you is that you don't. Okay, you have a professional do it. Because you guys, this has to hold up against the IRS. And if you have a professional do it, they should be creating a compliance report for you. Okay, that says this is where we ran this number, this is where we got it from, that would hold up if the IRS were to ever audit you. That is something that we do offer in our reasonable compensation, and I don't know what you call it, preparation, comparison, calculation. There we go. So for an S corporation, you guys, there's different parts, and let's just talk about you guys. Okay, so for an S corp, there's different factors. There's no just number. There's not a chart, a magic number that says, okay, I am a CPA, so here's my reasonable compensation. That's not how it works. Okay, so there are multiple pieces that go into calculating a reasonable compensation in a way that will be upheld by the IRS. Okay, so first you want to look at, you got to figure out, what do you do for your business, right? Because like for me, am I just an accountant in the business? Am I just doing tax returns? Or am I also running the business? Am I acting as CEO? Okay, so you got to figure out what exactly it is you as the shareholder are doing in your business. Okay, and then you got to figure out, okay, well, what would it cost for me to hire someone to do these things? Okay, what would it cost for me to hire a CPO? Ooh, CEO. What would it cost for me to hire another accountant to do the tax returns I'm doing? What would it cost to hire someone to do my bookkeeping, if you're still doing in-house bookkeeping? Okay, so everything you're doing for the business, you have to put a value on that. Okay, what would you pay somebody to do all those things? Okay, another thing is, they're going to, if you got to look at your pay compared to what your employees, your non-shareholder employees are making. Okay, if I'm paying a CPA to do tax returns, I'm paying them $100,000, but I'm doing the exact same stuff and I'm trying to pay myself $20,000, that's not going to fly. Okay, they are also going to look, another thing you need to take into consideration is the amount of money you're taking out of the business. Okay, if every dollar you're taking out of the business is coming through W-2 wages, and it's still your wages are low, that's not going to be as bad as if your wages are low, but you're taking twice that out in non-taxable dividends or draws. Okay, and then if you have a compensation agreement, that's always a good thing to have. That just says this is the compensation you're paying. This is the duty. These are the duties you are performing. Okay, another piece. So what you would have to pay yourself if you replaced yourself. Okay, that's the first thing. Your first criteria as you're calculating the S corp, the reasonable compensation. The second thing is, what would you get paid to go do what you're doing for another business, for another firm? What would a similar business pay you to do what you're doing in the business? Okay, so kind of what are the two sides of the same coin? Okay, what are you paying other people, or what would you pay other people to do in your business? What would another business pay you to do what you're doing in their business? All right, and then the other piece of the piece of that comes into play is your experience, your employee information. Okay, because it goes back to, if you're paying someone with 3 years of experience doing what you're doing and you have 20 years of experience and y'all are doing the same thing and you're getting paid a third of what they're getting paid, you're going to get in trouble. Okay. So your training and experience, your duties and responsibilities, right? It doesn't come back to just, yeah, I'm doing tax returns in my business. I'm also the CEO. I'm also doing the finances. I'm also the bookkeeper. Whatever you're doing in the business, all the things you're doing come into play. And then it comes into, what is the time and effort devoted to the business? All right. If you're the only person in your business and your business is making, $200,000 a year, then you're obviously doing everything, right? Your time and effort devoted to the business is high. And so you're going to have to make sure you're paying yourself a salary that reflects that. All right. And for a C Corp, it is very similar. There's a few pieces that get a little more complicated, but for the most part, if you start with those same criteria, you're going to be in a good place. Okay. So that is kind of where we are. I don't see any questions, which is good. I hope that means we're kind of in the same place. But really, you guys, what it comes down to, what I highly recommend is you work with a professional, because you can pull most of this information. You're going to have to, whether you do this on your own or you work with a professional, you're going to have to outline your duties, right? You're going to have to say, this is what I do. But a professional can help you say, okay, well, if you wanted to hire someone for this, this is what it would cost you. If you were to go do these same things for another business, this is what you'd get paid. Okay, they're going to be able to help you balance those W-2 wages with your draws or distributions. Okay, because that's a piece that comes into play. Because again, if you're taking a $40,000 salary with no draws, that's different than if you're taking a $40,000 salary with $50,000 in draws. Okay, the thing being, guys, is and there's a fine line, because you also don't want to overinflate your W-2 wages, because then you're losing tax savings, right? The whole point of, not the whole point, but one of the primary reasons of going to an S corp is because you get to save on those self-employment taxes, those payroll taxes, right? So if you're paying yourself an exorbitant, like overpaying yourself on salary, then you're losing out on that savings. Okay, and a tax professional can help you balance those two. Stay compliant with the IRS, but make sure you're not wasting money, right? Throwing money away. All right, cool. So a few announcements before I let you guys go. So our biggest news, you guys, I'm going to start with my Bba announcements, and then I'll go into some other ones. But for my firm, we have spent the last 3 months building brand new service packages for y'all, because you guys, 2020 has been a heck of a year, right? I mean, we, especially from a tax preparer, a tax professional, we had July 15th filing deadlines. We helped people with their PPPs and their EIDLs and their PUA. And our team, you guys, our team has spent over twice as much time as prior years on customer related tasks, customer service tasks. answering emails, returning calls, answering questions. And we still feel like we probably could have done better. You know, there's still things where we're not feeling like we're all in. And 2020 has just given us a new way to show up for you guys, a way that we never dreamed of, but it's also given us a chance to talk to a lot of you on a deeper level than we normally get to, right? So many people just, you know, talk to us once a year and then we don't talk to them again until the next year. But this year we've gotten to talk to so many of our clients on an ongoing basis because we've been helping them, you know, with all of this, you know, shove the craziness of pivoting their business and making sure their business survives through this pandemic. Okay. And so what we've learned is that helping our clients and showing up when they need us is what lights our hearts on fire. Okay. It's where our small team thrives and where we want to spend more of our time, you know, and efforts. That's where we want to be is helping and talking to our clients. We've also learned that in this last year that our clientele's needs are really shifting. You know, I inherited a business that was 95%, you know, once a year clients. And as our clientele has shifted, we are learning that our clients want to talk to us more. They want more guidance and handholding. And so those two things are right. What we want to provide is more handholding and guidance. What a lot of our clients are needing is more handholding and guidance. So we have spent the last 3 months just building these packages to make sure we can provide that level of service to our clients who want it. So if you want someone who not only does your tax return, but is available year round for those quick questions that won't make you feel dumb or afraid to, you know, receive the follow-up, you know, you're not afraid to receive that a la carte billing, you know, for your CPA's time, because most CPAs do bill like attorneys, then these packages are going to be for you. We really took this rediscovered passion to help our clients and we built it into something we are really, really excited about. So please, if this intrigues you, if this is interesting, go. 7 amazing wonders of the world. Sorry, Alexa's talking. Go check out our tax packages for 2021. Every package, there's tiers, you guys. We've created tiers for all of the different types of clients we have and we service. And every single package, regardless of the tier, is going to include your 2020 tax preparation, right? We're going to prepare your 2020 tax return. You're going to get an entire year of unlimited support and access to our team. You're going to have access to our BBA clients only private community. And of course, we have our secure client portals, our quarterly estimated tax payment reminders, all the things. And then some of the additional services that we have in some of the different packages are annual and quarterly tax planning. So built into your tax package, you guys, instead of having tax prep here and tax planning here, you just take care of it all at once. It's all included. We have quarterly tax payment calculations. So for those of you whose income fluctuates up and down and you want to know exactly how much you owe every quarter, we can do that for you. Handling of IRS and state income tax notices, IRS audit representation, annual in-person meetings with our team. We're going to have exclusive tax workshops for just our clients that you guys are going to be able to join us for. We have a new BBA CFO approach, meaning if you want more than just tax guidance, you want to actually help you with your profit margins and hitting those KPIs, those key performance indicators, we're going to be able to help you with that. Payroll, bookkeeping, basically anything you want from an accounting perspective, we're going to be able to include, and there's going to be this stellar level of customer service included. So if that interests you, please go check it out. I'll try to put the link, but it's brebearcpa.com/tax-packages. You can check those out. And then you guys, is still time for 2020 tax planning. So we started that. And if you're interested in that, I think this week and next is your last chance to actually sign up and get in our queue to be worked on before year end. So head on over there and look at those. That's brebearcpa.com/tax-planning. And then just a quick reminder, as always, to my PPP and EIDL borrowers, don't forget we can help you out there. So that's it. I am going to log off and log back in for our stimulus updates and Q&A live. So I don't know. So if you're sticking around for that, log out, log back into that. And then otherwise, I will see you next week. Next week, I'm going to have a special guest on. Her name is Courtney Baudet, and we are going to talk about when it's time to hire a bookkeeper. Okay, I'm really excited about this. So next week, we're going to talk about when to know that you're ready to hire a bookkeeper. And the following week, we're going to discuss when to hire a tax strategist. So just some tips and tricks to know, because I get that question a lot. Clients are asking, or taxpayers asking, what's this? Do I have to have a certain threshold, a certain amount of employees? We'll talk about all that. So we'll talk about that over the next 2 weeks. So I will do a better job making sure the time is right. And yeah. So I will see, hopefully, most of you in just a few minutes in our weekly updates and Q&A session. All right. Otherwise, I'll see you next week. Bye.